Hello everybody, welcome to Forge, Leonard here. Before talking about Tesla or Palantir, we need to talk about the index they depend on. Because right now, the Nasdaq is showing clear signs of weakness relative to other major US indices. The Nasdaq has not been able to print a new all-time high for 65 days since October 29. The S&P 500 did it just 9 days ago on December 24. Even the Russell 2000 managed to make a new all-time high 22 days ago on December 11. So the message is clear, the Nasdaq is lagging. Now let's look at drawdowns from those highs. The Nasdaq is down 3.49%, even the Russell 2000 is in a better position, down 3.18%. So the Nasdaq is not only lagging, it is also in a deeper correction than its peers. Now let's talk about Tesla. Tesla was actually able to make a new all-time high just 17 days ago on December 16, even while the Nasdaq was already failing to confirm new highs. The problem starts when the Nasdaq begins to roll over and Tesla follows. Tesla is already down 10.57%, which is literally 3x of Nasdaq drawdown. Now let's look at volume. What I'm going to show here is volume acceleration, not absolute volume. On Friday, Tesla's volume was 35% above its 7-day average. That places Tesla in the far above range when compared to the rest of the Nasdaq. In other words, selling activity in Tesla is not only high relative to its own history, it's also strong relative to other Nasdaq assets. And that is not what you want to see when price is falling inside an already weak index. Now here's something more subtle and more concerning. Tesla's volume versus its 14-day average is slightly negative at minus 1.42%. But even that places Tesla in the far above range in my system. Why? Because again, we're measuring acceleration, not raw volume. It tells us that volume pressure across the Nasdaq is already elevated and Tesla remains extreme even relative to that. And finally, versus the 30-day average, Tesla's volume is up 9.95%. So Tesla is trading more volume on the way down than on the way up. Now let's look at the same metric but applied to price instead of volume. When we compare Tesla's price to its recent averages, the picture is very clear. Tesla is negative across all the ranges I measure. So on its own, Tesla is clearly trading below trend. But the real question is not how Tesla looks in isolation. The real question is, how does this look when we compare Tesla to the rest of the Nasdaq? And this is where things become more interesting. My system is flying Tesla as far below relative to other Nasdaq assets on the 7 and 14-day timeframes, and below on the 30-day timeframe. This is important. We are already dealing with a weak index, and when we compare Tesla to other assets inside that weak index, Tesla shows up as one of the most punished names. Now let's address volatility. Yes, Tesla's volatility is high relative to the Nasdaq. It gets an above flag in the volatility signal. But here's the key point. Volatility acceleration is actually slowing down. That suggests that this move is not being driven by expanding volatility anymore. At best, this could temporarily protect the downside, but it also means Tesla is not falling simply because it's more volatile. So when you put everything together, yes, Tesla manages to print a new all-time high while the Nasdaq could not, but the recent price action is clearly weak, even when you compare Tesla against other Nasdaq assets. Now, what about Palantir? With Palantir, the situation is actually worse. Palantir was not able to make a recent all-time high. It was 60 days ago, 5 days later than the Nasdaq. And on Friday, Palantir dropped 5.58%. That move falls within the worst 10% daily declines Palantir has had over the last 60 days. There was no major negative macro event or specific news. Palantir simply crashed hard. Palantir has an even stronger correlation to the Nasdaq than Tesla, and right now it is showing a drawdown of 18.97%, which is 5.42 times worse than the Nasdaq drawdown. And things get really bad when you look at volume. On Friday, volume versus the 7-day average was up 100% on a very aggressive red day. That large correction came with a huge spike in volume, and when you compare it to the 14 and 30-day averages, volume is still up 50%. So my conclusion is the following. The Nasdaq is showing weakness, and these two names are not just weak on their own, they are showing weakness even when compared to the entire Nasdaq universe. This means that if the market enters a risk-off phase, these assets are likely to continue dropping. At the same time, the elevated volume could eventually lead to a mean reversion if economic data comes out in favor of a rate cut. They could reverse, but for now, we will know more in the next few days when new economic data is released. If you like looking at markets through data and metrics, leave a like, subscribe, and I will see you in the next one.